And we're live, guys. Welcome to another episode of Good Morning Crypto. Only here, only on IvanOnTech. Of course, we are broadcasting live straight out of Stockholm, Sweden, and we do the show each and every day at 8 a.m. Central European Time. And guys, today we have a very, very special guest. And because we're live, guys. We have Dixon, early investor in many of the companies that we all use today. Simon, welcome to the show. Can you please give us a short summary of what you're doing and what you have done? Because you have an interesting background, interesting story.
Sure. Okay. Yes. Thank you for having me, Ivan. So my name is Simon Dixon. I'm the CEO and co-founder of a company called BnkToTheFuture.com. And I've been advocating for Bitcoin and investing in crypto companies. Through BnkToTheFuture.com, I was I found Bitcoin because I was in a small community before the Bitcoin community called the Monetary Reform Movement. And I wrote a book called Bank to the Future on the future of money. And the second version of that book was the first published book in the world that included Bitcoin, and just been investing in the industry ever since.
Interesting, and we're definitely going to get into that because you told me that you're an early investor in Coinbase, Kraken, Bitfenix, Bitstamp, and the Shapeshift, BitPay, and many others. Then you also told me that you were the speaker at the first Bitcoin conference in 2011 when most people didn't even know what Bitcoin was. And also we're going to talk about so many things that are happening right now in the industry from your point of view. So first of all, let's go back to the beginning and discuss how you really found Bitcoin and what happened at those times. And by the way, before we get into that, I want to welcome everyone in the chat. Welcome Mad Cow, Fabrice, Marcio, Mar, Andreas, Big Love, Juicy, everyone very, very welcome. At the end of this episode, we're going to give away Academy as always. You just need to write what you have learned. So Simon, please tell us, how did you find Bitcoin from the beginning and what was your experience?
Sure. So I was working in investment banking, and I decided to quit in around about 2006. I was a market maker for small cap stocks on the London Stock Exchange for an investment bank called KBC. And then I moved into IPOs in corporate finance, taking venture capital backed deals and sending them public on the London Stock Exchange AIM market. And prior to that, I was studying economics, but I decided in 2006 that it was time to throw in the corporate towel, about a year before the financial crisis started to come to be, because I wanted to return to my economic studies on money and really look and dig into the unsustainable nature of the banking system. So I was part of a community, as I said in the beginning, called the Monetary Reform Movement. And that was prior to the Bitcoin community. And we were discussing the problems of banking and several problems that were going to lead to the demise of the traditional financial system. And so it was really giving talks on that pre-financial crisis. And then moving into the financial crisis, when people started to get interested in the topic of money, that I met guy called Johnny Bitcoin at a presentation in I believe it was before Occupy London, but somewhere around that, and he was telling me about how he sold his house, moved into a squat in Old Street with some early developers that were working on Bitcoin, and he sold his house and moved in, and he was part of the monetary reform movement. And so that's when I first discovered Bitcoin. He told me all about it. And myself and my wife were trying to create a bank at the time, a non-fractional reserve bank, to kind of show how things could be done. But there was massive problems with regulators at the time in trying to launch a new bank. So when we were invited to speak at the first Bitcoin conference in Prague, then we were really coming at it from looking for a solution of how could we build a bank that exists outside the traditional financial system. And then Bitcoin was really a solution to a problem that we were looking to solve in the very early days. And that's how I first discovered it.
All right. So that was in 2011 that you guys went to that conference, because that is the first Bitcoin conference that you're talking about.
Yeah, that was 2011, November 2011 in Prague.
And what was the community at that time? What was the Bitcoin price? Did Bitcoin even have a price? CoinMarketCap, were they even around? Because I entered in 2013 and most of these things were in place by then. So in 2011, 2 years before I entered, how was the community?
Yeah, so when I first started looking at it for inclusion in the book Bank to the Future, I can't remember exactly what the price was, but I know by the time I got to the conference, the conference was about 40 people, who some of the people there were like the co-founder of Trezor. Tony Galippi was pitching his new startup called BitPay. The sponsor of the conference was Mt. Gox. And the price of Bitcoin during the conference crashed from $30 to $3. So it was a 90% correction. And that was after an astronomical run up to the $30. So that was really, during that conference, was our first big crash. I remember it was held with the Isabel, the co-founder of Trezor. She was starting on a little lab at the time, which later incubated Trezor. And that's where I first met Max Kaiser as well. He was hosting a panel there, and I was on the panel and gave a talk on the difference between Bitcoin and banking, and how Bitcoin might be used in order to get around the fact that there's systemic risk in the banking system.
And it's going to be interesting to hear your opinion about the current state of Bitcoin, because we see many early investors and early people in the community like Roger Ver, also Craig Wright and many others basically saying that we're no longer following the vision of Bitcoin, and that we even have Satoshi's vision on other coins. But let's leave it a bit further on in the stream. So you are at the conference, you're meeting the founders of Trezor. Mt. Gox is sponsoring the episode. It really sets the tone for those times. And most of the trading back then was on Mt. Gox, correct?
All of the trading was on Mt. Gox. Yeah, nothing else existed then.
And so, are you a victim of Mt. Gox as well then?
Fortunately not. The very first Bitcoin I purchased was during the conference, and someone came up and had a Casasius physical Bitcoin that had 5 Bitcoin on it. And I purchased it for just I think it was just over £25 at the time or something. So that was my first introduction, was because it was so hard in those days, and because I was coming at it from the perspective of how to use Bitcoin outside of the traditional financial system. Although I didn't get caught in having coins on Mt. Gox, and I met smart people from the very beginning at that conference that were really, it was an anarchist movement. It was a movement around being able to transact outside of the traditional financial system. It was computer scientists that were, really not looking at this from an investment perspective at all, but looking at this as a computer science experiment to how you solve some specific problems about removing censorship from transactions.
Right. And I think what's interesting at that point is that all of the big companies were just starting out, and you could really meet all of them in one meetup, like Trezor, you said, and the Mt. Gox was also a very big company that sponsored. Now they're obviously not here anymore. What happened then? What kind of actions did you take that led you to the creation of BnkToTheFuture, and what did you have in mind at that point? Did you think, okay, let's build a big company in crypto? Because at that time it was so uncertain, and who knew what is going to be of it? It was the size like computer game money or something.
Yeah, so as I said, we were trying to create what's called a non-fractional reserve bank, which is a bank which is not based upon debt. And it turned out that it was impossible to create, because even the regulators, when we went to meet them, said you have to build it on a fractional reserve system in order to secure a banking license. Otherwise, it's a different type of institution. We were getting so much resistance at the time because we wanted to do banking the way that we thought was sustainable. Really, we pivoted our business model at that time. We started BnkToTheFuture, which was meant to be an alternative bank. And we were working and decided that, well, we believe that the future of finance is going to be very different from the past. We were more fintech investors. We were looking at anything that could change the railroads of the banking system. But my wife and myself, who are the co-founders, we were really inspired at the Bitcoin conference. So we decided to start looking at a way where we could fund these Bitcoin companies that no venture capitalist was interested in investing in. And that led us to doing some work. At the time we were in the UK, I no longer live in the UK, But during the UK, we went to the regulators that we were trying to secure the banking license from, and tried to pitch them a concept. There were three companies at the time of how you could upgrade securities laws in order to allow investors to invest online. And so we were looking at that time, there was business models like peer-to-peer lending and crowdfunding. And we wanted to do the same for equity and democratize venture capital at the time. There was a couple of TEDx talks where I gave a presentation way back then on this topic. Really that led to us pivoting from trying to secure a banking license to trying to secure securities registrations so that we could sell shares in companies online, really because I wanted to invest across the whole industry. I was really bullish on that and the future of the industry, but I didn't know which companies would succeed or fail, so I wanted to put a little bit in everything. And so we decided, because the company actually made some early investments in Bitcoin, that we would thank Bitcoin by dedicating it to trying to fund all of the parts of the ecosystem, and allow our investors to actually co-invest with us on the platform. So that's really the originations of BnkToTheFuture.
So are you investing your own money, or are you basically a fund? Because you just mentioned that you have your investors. So is it more like a fund, or you're more like an angel that you invest your own money?
So personally, I invest through BnkToTheFuture as well. So I'm a customer of BnkToTheFuture and the founder of BnkToTheFuture. And so through BnkToTheFuture, I'm able to invest in equity of what later became many of the largest companies in crypto, and built a portfolio of approximately 100 different crypto companies over time.
Right, but BnkToTheFuture in itself is more like a venture capital firm where you open up a fund, people invest, and then you go out into the industry and you get into equities of startups.
Not quite. So BnkToTheFuture is a platform where we're not a venture capital fund. Okay. If you want to invest in the equity of these companies, then we pull together all the investors that decide to invest, but they pick what they want to invest in and what deals they want to go for. And then we have a special structure whereby we can invest as a venture capitalist in the company, but pull together all the funds that were invested through the platform.
Got it. So then it's more of an investment bank scenario where you pull together, you match investors and startups, and then can do it through you. I'm just trying to kind of match it to what exists outside of crypto. Is it like angel list? Can you kind of compare it so people understand?
Yeah, if you want to come up with an analogy that people can understand, this is angels list for crypto and fintech.
But are you allowed to have the word bank in your name if you're not a bank?
No, and that's why. So we originally had the trademark and domain. We still got them for BnkToTheFuture.com with an A, because we were originally applying for a banking license. When we decided to pivot to a securities business, there's very strict rules around whether you can have bank in your name. And when you register a company and look to apply for licenses, you need permission from the regulator in each country in order to use the word bank, because you have to have a banking license to have it in your name, or you need to be an obvious, non-bank, something like ClickBank or something like that that's got nothing to do with financial services. Right. So what we had to do is we had to take the A out of our name, because we were no longer going for the banking mission. And so we have the domain BnkToTheFuture without the A as well, because it was all about funding the future of finance through investments as opposed to banking, which is deposit taking and loans.
Got it. The reason I know this is because I was researching the early days of Coinbase, and I think I read that from the beginning it was Coin Bank, but then Brian had to reconsider the name because he wasn't allowed to use it.
That's exactly it. Yeah, I mean, anyone that's going anywhere in the industry in terms of regulations, then at some point they'll encounter that. I know several companies use the word bank, but if they ever want to be a regulated institution or got big enough, then a regulator somewhere in the world would tell them that they're breaching the laws.
Right. And speaking about the investment side, I recently read the book that I can recommend everyone. Let me just find it. It's called Angel by, what is his name? Angel book. I don't know. Calacanis. He's a famous guy in Silicon Valley. Calacanis. Guys, check this book out. What I think is interesting with this book on angel investing, written by Jason Calacanis, a kind of a celebrity in Silicon Valley, is that he mathematically proves that odds are on your side. If you have, for example, $100K, obviously you have to earn it. You need to work hard for it. But once you have it, odds are actually on your side to make it big if you invest in technology and you spend time doing it. So, do you agree? Should everyone who is interested in tech try to be an angel investor? What is your approach to investing? Because obviously it's extremely high risk, because you have the risk that Bitcoin will fail, then all your startups will fail, and then you also have the risk that the team will not deliver on top of that.
Yeah, so we've seen some interesting things over our time. What I can do is I can share what I've learned from the lessons of investors who got very wealthy through Bank to the Future.
Sure.
And so, with angel investing, it is all about diversification and an appreciation of high risk, high return. So very similar to a lot of the lessons that people would have learned, I guess, during the ICO booms, if more people would have been got into investing through the ICO boom or through Bitcoin or Ethereum, is that you need to be really well diversified. So Ethereum, was really funded by the Bitcoin community through an ICO. They raised all their funding in Bitcoin. They reached out to the Bitcoin community and they wanted to create a new blockchain that could have smart contracts. That was a one-time, freak investment, just like Bitcoin was. The fact whether Bitcoin would ever have a shot at achieving sound money was ultra speculative and pretty much a long shot at the time when we got involved. And for that, you're going to make a lot of investments in deals that don't achieve their goal. So really, it's about diversification. So for the 100 deals that over 100 we've done on Bank to the Future, approximately 5 to 6 of them are now unicorn status, which means that they're over $1 billion. So that's a 5 to 6% that have achieved unicorn status. Others which have done very well. So we had companies like, Bitstamp got about a 5x return, didn't achieve unicorn. But then you had other companies like Kraken, which at today's valuation on our secondary market was a 200x return from the first Series A round. And that makes up for all the losses and all the things that didn't quite go to plan. And really, your best shot is really in, yes, you've got to pick an idea that gets traction, but a team that can pivot the idea no matter what. Take Bank to the Future, for example. We came to this on a mission to change banking. We couldn't get a banking license, so we had to pivot our model to securities. We discovered Bitcoin, and we took a bet that was really going to be something to do with the future of finance. We diversified across the different infrastructure, the different players in the industry. And it wasn't until, a lot later that it actually looked like, okay, this investment thesis is going to work out. We then, for example, we had an Ethereum security where people were receiving thousands of Ethereum as a result of investing in mining. Ethereum was under $1. It was there for a long time, and it went up to a peak of $1,300. But the people that were investing approximately 2 to 3 years before the trend actually happened were the ones that made the wealth. We've had quite a few windfalls. We had Bitcoin as sound money. We had the cryptocurrency exchanges. We were diversified across many of them. Kraken, Bitfenix, later Coinbase, Circle, Bitstamp. Those didn't become, it was a real long shot whether cryptocurrency exchanges would ever become these big businesses or whether they'd even make it. Then we had Ethereum, and that created this wave of ICOs where we got disrupted. So at Bank to the Future, nobody would sell equity anymore. Nobody would invest in equity because they all wanted these liquid tokens that were pumping 10, 20, 100x. And so we had to adjust and create a way where people could invest in tokens because our investors were demanding it in compliance with securities laws. So all I'm saying is that because we were focused on a singular vision and we were there on a mission, whatever the market threw at us, we would pivot. And that's why investors in Bank to the Future have, had a high return, because it's about finding a trend before the world believes in it, diversifying widely, and then having enough patience to see the full returns and not be, a frequent trader. I mean, obviously that's some people's strategy, but the investors that got wealthy through Bank to the Future, that's the approach that we see frequently, and how they've got lots and lots of funds to diversify into more angel investing to support the industry.
What I find interesting is that you mentioned that once you have a unicorn like Kraken or Coinbase or something else, we're talking about hundreds of excess of return. And I think the whole ICO space made people think in a bit wrong way, because now if you tell people, hey, there is an opportunity to get several hundred X, everyone is super skeptical, and for a good reason, because so many promises were broken. But at the same time, as an angel investor, that's exactly what you're looking for. And although the ICO mania is over, people are still making hundreds of X's in equities. So the example I think of that is quite recent is the Chainalysis. They recently closed another round, and if you look at what early investors made, that we're talking about hundreds of X's already. At the same time, there is this huge risk with crypto as a community as a whole. So looking at your returns, do you think it would be better, and also returns of your clients who are wealthy that you mentioned, who made it big, would it be better for them to just buy more Bitcoin? Or is it now mathematically proven that equity and Bitcoin is a bit more risky but also more return? Or is it actually more return or not?
That's a very tricky one, because we've got different types of investors. We've got investors on our platform. We were one of the first merchants that allowed people to invest using Bitcoin. So once we secured our securities license and we were able to do this, immediately we allowed for fiat purchases and crypto purchases. So then you have a different dynamic of, should you invest your fiat or should you invest your crypto? And it depends how you see crypto. So crypto is a very convenient way to pay, but at the same time, you're giving up the opportunity cost if you believe in the long-term vision of that. Some of the investments have outperformed Bitcoin. So Kraken, for example, the Series A to the Series B outperformed Bitcoin. During the Bitfenix hack, we did the world's first security token, which was a token where you could, if you were a hack victim of Bitfinex, you received their token, which was a debt token, and it was convertible to equity on Bank to the Future. If you purchased that token at about 20 cents, you could convert that to $1 worth of equity immediately. The equity went up to a peak of about $16, and it paid about 3 times the amount originally invested in dividends as well. Because it was sharing the profits through dividends. That outperformed Bitcoin during the really big bull market of Bitcoin. But then again, what we see this is, I think there's an interesting effect. So when you take something like, for example, let's take Telegram. Telegram was sold just to USD investors. It wasn't sold to the crypto community. They raised 1.7 million in traditional, venture capital and crypto venture capital and various other people. But that was $1.7 billion of fiat that was poured into the ecosystem. Now, through an ICO, it stays in crypto, and then, it's obviously had its regulatory challenges. But if it hits an exchange, or once it hits an exchange, people tend to stick in crypto. So if they convert it out to Bitcoin or Tether, then it's a sticky thing. It drives people in. So when you allow for investing in fiat and they receive returns in crypto, that's adding to essentially the number of people that are in crypto. And what we've seen is it's very sticky. Once you're in, you kind of stay in. For people that got a longer term horizon.
Interesting. That is at least my personal concern, because I had a few startups approach me and hey, pitching me ideas, but my biggest concern is, hey, I mean, if Bitcoin moons, you will also moon, but then if you will moon only if you also deliver, and Bitcoin itself is very risky, and now you're also basically doubling my risk by being in between. But yes, mathematically we've seen that a few unicorns still outperform Bitcoin a lot. I just want to go back a bit to
one comment on that,
Yes.
Please do not, don't get caught without Bitcoin. Don't take all of your
Right.
Bitcoin and invest it in private equity and end up with no Bitcoin. That's a really bad idea. This should be part of a diversified portfolio, with Bitcoin, being the world's best shot at achieving sound money, and the investment thesis that comes from where you think that goes next. But don't get caught without Bitcoin is the message here.
I see an interesting question from the chat from Death Metal. He says that he met you in 2016, just before the halving in 2016. And he is asking you to explain the 6 forms of money. He says that you are great at explaining that. So what does he mean?
So I have a Twitter account, and I try to go live whenever I can and give some educational content to give back to the community. I created a video on my YouTube channel called The 6 Forms of Money. And it would take, it's a 30-minute video where I go through the difference between money at a bank versus money in something like Tether versus Bitcoin versus cash. And really help people to try and understand, because I've got an investment thesis that the traditional financial system and the banking system is about to have huge systemic risk, and that all the governments and central banks around the world are actually priming in order to bail out the banking system through their own stable coin. But it's a bit beyond what we could go through here. We could check out.
Definitely check out Simon Dixon's YouTube channel. I will link it after the show, but I guess people can just write in the search Simon Dixon and they will find your YouTube. Yeah,
it's my name, Simon Dixon. So.
Right. What I wanted to ask you when we spoke about private equity and Kraken and Bitfenix and all of your investments is, did you meet Jesse in person? I interviewed him a few weeks back and I was really amazed at his whole story. So what was your first impression of him, if you met him?
Yeah, Jesse is the real right mix between a crypto missionary that is in this for the right reason versus a responsible CEO that knows how to execute and scale a company while still staying real to their principles. And we found that those are some of the best teams that we've backed at BnkToTheFuture. They're on a mission. They don't get deviated by the highs and lows and the bulls and bears and the craziness of our market. They're going to be here throughout the long haul. They're going to do whatever it takes to pivot in the face of massive, massive adversity and resistance. But at the same time, they're also going to stay real to their principles. And every time I've met Jesse, he is one of those rare people that really is in crypto for the right reason, at the same time as doing what a responsible CEO would do to make a company scale and last in a regulatory environment.
What is your relationship with companies you invest in? So, for example, when Jesse started Kraken, did they come to you, ask for advice? Did you have weekly meetings, monthly meetings? What is the process when you actually get into a startup?
No, I mean, we invested in the Series A, so he'd already done the seed. But at that time, it was really hard for crypto companies to secure venture funding. A few venture capitalists were in, some of the early ones were investments in companies like BitPay and things like that, and blockchain.com. In those, we were at the stage where Jesse knew what he was doing. We just needed to contribute to the round. They provide regular investor updates, and we pass those updates on to anyone that's syndicated through BnkToTheFuture. But really, we see ourselves as a strategic investor. We put all of our portfolio companies together. We're advocates for them, and we'll do whatever it takes to help them succeed, because the real money is made in the upside, and the real money is made in the disruption of the traditional financial system and giving people an exit from traditional financial service as the banking crisis and inevitable crisis unfolds, which is where I think the real returns are made, because I'm forecasting one of the largest redistributions of wealth that we've ever seen from those that have already bought into the crypto markets versus those that are going to come later.
Interesting. But how do you mean? Do you mean that so people who bought in right now will benefit or not? Because it sounded like it's going to redistribute from them to new people.
No, the other way around.
The other way around. Right.
People that aren't bored on crypto from the people that are on board of crypto.
Got it.
So when I look at Bitcoin, I see it as what I call a speculative store of value. Now, maybe we're going into you wanted to cover the whole cash versus store of value. I could cover it there if you prefer.
Sure, let's do that.
Okay, so yeah, when I look at Bitcoin right now, certainly it was created as peer-to-peer electronic cash. It was all about creating a censorship-resistant way for transacting. That was all the conversations at the time. But then I was into it because of some of the properties of Bitcoin. So when I wrote the book Bank to the Future, I talked about the 3 problems in banking that Bitcoin went on to solve, which is that when you deposit your money at a bank becomes the legal owner of your money. With Bitcoin, you get to own your own money. When you deposit your money at a bank, they get to spend your money and distribute it through loans. With Bitcoin, you get to transact on a peer-to-peer censorship-resistant scale if you're not putting a middleman in the middle. And finally, the interesting part that was in terms of monetary policy was the fact that the money supply in the traditional fiat system is essentially a debt-based Ponzi scheme where you have to have more debt in order to have more money. If you have less debt, you have less money, which creates boom and bust cycles. But with Bitcoin, there's just a fixed money supply, and I believe will go on to become a really rare, scarce asset. But the reason I call it a speculative store of value rather than digital cash or a store of value is because I believe that the profits in holding Bitcoin are because the majority of the world still thinks it's a Ponzi scheme, a currency just for drug dealers, or a scam. The day that the world knows that it's not a scam, not a currency just for drug dealers, and not a Ponzi scheme, is the day when it probably can become a medium of exchange. But right now, gold is a store of value. It maintains its value. Bitcoin is a speculative store of value because there's huge profits and investments to be made if it becomes a store of value. And I believe that there's where the discrepancy is. But once it does become a store of value, it can then become a great medium of exchange, and it can be a medium of exchange on the way up as well.
So you're speaking about Bitcoin as a macro asset that will emerge during the next financial meltdown.
I think it's a lot of different things to a lot of different people, and people use it for censorship-resistant money where there's massive censorship. They also use it as a hedge against a traditional financial system, meaning that they can transact no matter what happens to their funds at a bank. But it also has a monetary policy that makes it a completely rare, scarce digital asset. And the reason there's so much argument is because all of those are right. It can be used as all of those. And it has many properties of things that, like a currency, like a stock, like a commodity. And while everyone's arguing about what it is, it can be all of those to many different people. And combined with financial innovation, it can then also work to disrupt all sorts of different financial products using lots of different applications that come from it.
Mm-hmm. I think an interesting idea to discuss is how long this is going to take, because the current traditional system that we have in place right now, where most people store their wealth and invest their wealth, they can still artificially pump it for quite some time. So according to you, what time horizon are we looking at? 10 years, 15 years? Nobody knows for sure, but what is your feeling?
So the thing that I think people need to be aware of is a simple thing, which is that there is systemic risk in the traditional fiat financial system. And by systemic risk, it means that it's all built upon debt. And in order to have the system continue, you have to find a new source for your debt. So whether it's through credit card loans and consumer loans and student loans, then you can increase consumer debt, increase the money supply, because the governments have outsourced money creation to the private banking sector. If you find property markets and get 40% of the world to take mortgages, then you found a new money supply that the private banks can create. And if those get overinflated and people can't borrow in order to create more money, then you find a product for businesses, or you change the odds, like you turn the property into something like a collateralized debt obligation and sell it to hedge fund managers, which is essentially pooling together all of your money and your pension money and your insurance premiums. So you sell it to them. And then when all of that fails, you try to sell it to the government. And if the government doesn't have enough money to take on more debt, then you create financial engineering at the central bank level called quantitative easing. Eventually, you're going to have to make the next wave of financial engineering, which I'm forecasting will be central banks waging war on retail banks by allowing them to go bust and replacing their deposits with a stable coin, which is what all the central banks are gearing up for right now. But what you have to appreciate is there is systemic risk in the financial system. It is fiat money is a Ponzi scheme that needs to be perpetuated with a new form of debt money. And eventually, you either can do financial engineering forever, like the latest one I believe will be blockchain stablecoins, or there is going to be some kind of systemic risk event. Now, the last one was a tiny little island of 200,000 people called Iceland, got taken over by investment banks that screwed up the whole system, and that created a systemic risk event that exposed a fraudulent property market in subprime crisis, and then that led to the whole house of cards being exposed for what it is. Liquidity dries up, like we recently saw with repo markets, and then the whole house of cards starts to tumble, and you get, for the first time, crypto and Bitcoin adoption. Now, I don't want that to happen, by the way, but that, I believe, is inevitable, predictable, and guaranteed, and people will find crypto for different reasons, based upon, the first big adoption was the Cyprus crisis. People learned, oh, the money at a bank is not mine. Therefore, I'm not look at money that I could own. And the financial system and these systemic risks will expose a use case for crypto one at a time.
That's very interesting. Let's just reiterate what you've said once again so that I understand and people also understand it for sure. So you're talking about these different cycles where you have different kinds of debt. So because the whole system is built on debt, banks need to create debt. So you mentioned that you have corporations taking out debt. When that runs out, they go to retail, credit cards. Now retail people take out debt. When that runs out, you have financial engineering through quantitative easing. When that runs out, basically the next step of this puzzle, thinking about where we are right now, because right now we are in the quantitative easing stage, right? So this is coming to an end because it's no longer effective. So then you're saying the next stage is that the central bank will let the retail banks fail in different countries and replace the deposits with a stable coin. And I think it's very interesting because in Sweden we do have a stable coin being developed. It's really not about blockchain at all, but they are saying that, they're talking about the fact that we're not using any cash anymore in Sweden, and it is a risk that you have a few banks being in charge of all transactions, because if Visa or MasterCard or something else is down, people cannot buy food, cannot buy gas, and nobody accepts cash anymore. So therefore the central bank in Sweden is creating their own digital cash. Why would they let the private banks, retail banks fail? Because that would create such a chaos in society if people lose their deposits like in Cyprus. And obviously it happened in 2013. And mostly it was wealthy people that lost money. If you had over 100k euro, you lost money. But that is also their whole business model in Cyprus, to cater to wealthy investors. So I think they really messed up their whole business model as a country. But why do you think that the central bank will do it? How do you make this prediction?
Sure. Okay. So it's, again, this ties slightly into the 6 forms of money we were talking about, but we'll just cover 2 here to help you understand 3 to help you understand where I get to that prediction. So first thing is, governments do create money as cash and coins. When you print a $10 note, it costs approximately 3 cents to make, and there's $9.97 margin for the central bank that then transfers that to Treasury, and it reduces taxpayers' money. The $9.97, the $10 is put into an ATM, and that allows people to draw money through the banking system that was created by government. It's not backed by debt. Is simply as much of that supply. It only accounts for about 3% of money. 97% money is you go and try to get a mortgage. They deposit brand new funds into your account, and you have to repay that mortgage. That's brand new money in the money supply. It's a digital currency that banks have a license to create. So Bitcoin wasn't the first digital currency. Fiat currencies were the first digital currencies. Where the government said, if you have a banking license, you can create money every time you issue a loan, and you have to have a model of risk accounting to make sure the whole house of cards doesn't fall down. That accounts for 97% of the money supply, which is all backed upon debt, as we talked about. Now, we also talked about business cycles where you have, you decrease interest rates, which encourages consumer borrowing and corporate borrowing. And therefore, you stimulate the economy by decreasing interest rates and you get a boost of the money supply. More people lend, more people borrow, rather. But then this bogey called inflation comes along, and the central bank needs to then control that so it doesn't get out of control. So then they put interest rates up, which sends the people that borrowed the money bankrupt and cools down the economy. And this is the business cycle. And then you find another form of debt money, which pops the next business cycle from another institution or financial engineering. Now, eventually, you are going to have some kind of systemic risk event in a bank. And the government this time have several choices. They could either allow the bank to bail in, and the bank essentially, if banks mass bail in, then it's essentially removing all trust from the financial system. Not a very optimum option, not going to work on large scale. Too many people lose their money. Too people remove, it will create the next run on the banking system or they just stop you. What else could they do? Well, they could bail out. They could give them the money or lend them the money or invest in the bank like they did during the last financial crisis. But this time, the public don't understand that. They're more educated than they were the last time. There would be riots on the streets, government protests, let the banks go bust because the average person doesn't understand the deposit insurance scheme is not effective. Essentially it's not that's another semi-Ponzi scheme as well. There's not enough money to cover the liabilities. The government could create it, of course. But then they start to realize that. So that would complete, again, mistrust in the financial system, riots in the streets. What else could they do? Well, they opted for quantitative easing because no one understands it. It's the path of least resistance, which is essentially give large corporations and banks loads of cheap debt. They can then buy back their stocks, buy back their bonds, pop up the property markets through real estate loans. They get a large margin because they're borrowing at a cheap rate, lending out at a more expensive rate. You get a pop in real estate loans. You get a pop in the stock market. You get a pop in the bond market. But it's perpetuated on a debt level that the economy has never seen, up to $240 trillion of global debt right now, that has allowed our stock markets, our bond markets, and our real estate to get to record high prices. Eventually, you have some kind of systemic risk event. It could be students that just can't afford to pay their loan or refuse to pay their loan. It could be credit cards that have been rehypothecated on 0% interest too many times to new suppliers. It could be an insurance scheme problem. It could be riots in Hong Kong that expose that more Hong Kong people want dollars and there's not enough dollars to back the amount there. And then they introduce capital inflows. It could be India saying, let's make cash illegal in an economy which is predominantly built upon cash. And then people have to queue outside the banking system, swapping their cash for bank deposits, and people deciding that they're not going to have that. Whatever the event is, I don't know what it is. But it's going to cause a systemic risk event, just like we saw in 2007, 2008. And eventually it's going to have to be solved. Now, what I believe, the only last card they don't have interest rates. They don't have QE. That can't continue indefinitely. They don't have bail-ins. They don't have bailouts. What have they got next? They don't have monetary policy anymore because it's too over-leveraged. What do they have? Well, what they could do is they could say, look, we don't want anyone to lose their money. Chase Bank is in major risk right now. They've got these toxic assets or toxic debt or whatever it might be as a result. Why don't you, if anybody downloads this app, then they can take their Chase Balance Bank and they can exchange it. We will match the balance that you had at Chase Bank with our stablecoin digital currency, and you don't lose any money, but we can allow Chase to go bust. And then what the central bank has achieved is they've taken over the money supply again. They've replaced debt-based money that was your bank deposit with debt-free money created by a central bank. And that is what I think the next level of financial engineering is, allowing the bank to go bust, where consumers don't lose their money, and they swap your bank balance with a digital currency that's not backed by debt.
Very
The
interesting.
problem is that is a far scarier world. Although it's not a debt-based Ponzi scheme, it means that you've moved to a completely, fractional reserve banking was a capitalist solution to money creation by having banks that compete to create money. But now when you put it back to the central bank, you've got full control. You have a money supply that's not one step removed from the government, and you have somebody, countries all around the world fighting for tax. If you're freelancing in one country, get paid in another country, and your company is incorporated in another, you've then got three governments who are going to automate tax into your blockchain-based stablecoin, and then you're going to try and claim it back from these three different governments that all think that they have the tax. And when you get to the border to try and sort it out, they switch off your passport because you owe them some tax that they automated into the system. So we're moving into a very, very scary world with these blockchain-based stable coins, but they, in my perspective, are inevitable, predictable, and guaranteed because the systemic risk in the private banking money creation model that governments outsourced when they allowed banks to create more deposits than they have.
That's very interesting. This whole system is basically built on the foundation of fractional reserve, where banks only have to keep approximately 10%, meaning that they can also take a lot of risk because they are expecting the government to bail them out if their organization fails. And their organization could fail, as you say, if, for example, we see Hong Kong or student debt or just some other anomaly, some other black swan happening in the economy, so that now their house of cards is starting to fall because they're so over leveraged. They only have 10% in the reserve. Everything else is being lent out, and basically it's a lot of risk, but that's the whole business model. So you're saying that governments will not be able to do bail-in. That is too painful to the public. Bailout will not work as well because now everyone knows how it works with QE. So they will just say, hey, let's let the banks fail. Now you get stable coins instead, and everyone is happy except the banks. But you're assuming that the central bank and the retail bank is not at the same team. So can you assume that or not? Because obviously these are very powerful people who are probably in the same rooms, in the same talks, in the same discussions as central banks and the government. So why should they just disregard the interests of the shareholders in the biggest banks?
Because most central banks are quasi-government institutions, with the exception of some like the Federal Reserve, which are private companies. But most of them are quasi-government institutions. And when they're faced with the problem of we don't have enough tax collection, we are broke ourselves, our balance sheet doesn't work, but we have the opportunity to solve all of that. How are we going to pay off? How is the states going to pay off their $22 trillion of national debt? They can't do it through economic growth. Because if they repaid it, that would be disappearing money from the system. As you repay loans, money disappears, which creates recessions. So if they tried to pay off their $22 trillion of debt, it would be the greatest depression we've ever seen. So they will get into it through necessity because it's the only way to keep the system alive and remain, and they get extra control. The motivations of keeping the banking system alive versus the technological innovation that now a central bank can issue their own stablecoin, open up an API key, and fintech companies can do all of the competing services based upon money that they can create in order to pay down their national debt, bail out the banking system, and move from a debt-based monetary system to a debt-free monetary system where they have full control. That temptation will be far greater than the lobbying power of the banks at some point.
When I want to take a mortgage in the future, will I do it from the banks, but they're not going to do it through fractional reserve? They're going to actually give it from other lenders? How will it work in this new system you're talking about, where you have the money being handled by central banks and you have your account at the central bank, but where do you actually get the loan and how will that work?
So this brings us full circle to where I discovered, Bitcoin in the first place, because we were looking at creating a non-fractional reserve bank. And then we were looking at the different models of financial innovation and fintech that were happening at the time, and it was peer-to-peer lending. The only problem is that peer-to-peer lending is a great solution for when money exists, how you can have a buoyant lending market without actually having to leverage the customer's deposit. The problem is that for money to exist, it still needs to be created at a bank. So traditional loans had a much greater advantage over peer-to-peer loans because they controlled the money supply. This is a real big common misperception. People blame debt for this problem. Debt in itself is not a problem. Money created as debt is a Ponzi scheme. If you conflate the issues of creating a new money supply with a loan, you end up in a scenario where there's not enough money to repay the loan, so you have to perpetuate. But debt itself is not a problem. If you had a money supply that was created, just like we've seen with Bitcoin, then on top of that, you can create, through technology, you can create ways of collateralizing your Bitcoin and issuing loans, or some of the more DeFi solutions that are coming out right now. There is no issue with debt. All you're doing when you allow the bank to go bust and you replace that with a digital currency is you're saying, let's replace debt-based money at a bank with debt-free money at a central bank. And you're not changing the money supply. You're not creating inflation or deflation. You're just swapping one form of money with another form of money. And then if you have debt-based money or debt-free money, I believe through financial engineering that there will be a more capitalist, less crony capitalism in the lending market, because it will be going to where the best returns are based upon your adjusted risk, not because you have a crony ability to create money and offset the retail bank's balance sheet to a hedge fund that then sells it to a pension, and then you are no longer peer-to-peer in that sense of the process. So the lending market can prevail through financial engineering. It doesn't mean, by creating money as debt, you have more debt, but this is an inefficient allocation of debt versus debt-free money, where people can use technology in order to allocate where their savings go through financial technology.
Interesting. So you just described how lending will work in the future if we go to the system. What will be the effect on inflation? Because you said that if banks fail, the central bank will just take the same amount that you have in your retail bank and tell you just open your account at the central bank, will just mirror the amount you had in your retail bank. So you as a consumer, you're not being hurt at all. But at the same time, what will happen to real estate? What will happen to stocks? Because if it is the case that retail banks fail, I cannot imagine it not having any effect on stocks and real estate and all other assets.
Yeah, I mean, the assets that are overvalued, if it's left to a free market, will have significant corrections in value. Or the government will decide to take their new control and their new money at a central bank and stimulate it into the markets through crony capitalism that they want to stimulate the most. And so we move over to remember what we've done. There's a cost benefit. We've moved from debt-based money Ponzi scheme to debt-free money. But in exchange for that debt-free money, we've given more control to the central bank, which is less capitalist than a private fractional reserve banking system. So just like with Bitcoin, you kind of have this trade-off between not your money, not your keys. You'll have a similar trade-off in this system. But the point is, I don't think we're going to get a say, because the financial system is going to unfold and there's going to be desperate financial engineering, because what the financial system has shown, that it will do anything in order to keep the system alive. And they're willing to do, massive financial engineering changes in order to do that, whether it's done at the government level or the private, more capitalist level, like fractional reserve banking. It's impossible to forecast these things. What my investment thesis is that people will want an exit from the traditional financial system, and Bitcoin provides such an exit. All of these financial products, when you have central bank stable coins, will all be able to be integrated through technology, and one financial product at a time will be disrupted with another one. So if you have money in deposits and they primarily rely upon real estate growth in order to keep that model alive, versus if you have it in a government-based, debt-based economy, they will then control the flow. So it's very, very difficult to speculate in these times, other than making sure you're protected and hedged against the alternative, because I believe that the demand for money you can own, money you can spend censorship resistant, and a monetary policy that's independent of anybody is going to be a highly demand scarce asset in the future.
I think so too. I also try to understand what will happen in the traditional markets as well, because many people have stocks, many people own their home, maybe not young people, but many people maybe above 40 years old, they own their home, at least in Sweden. And so if it is the case that retail banks collapse, the central bank mirrors their account, but at the same time, financial markets collapse, it will still have a very devastating effect on the economy. So what will the central bank choose? To inflate the currency supply, to still pump up the markets, for example, stock market and real estate market, or will they choose to keep the fiat money stable in value, more stable in value? What do you think they will choose?
Well, that's a debate to be had, trying to second guess governments around the world in terms of what they'll do with their new control and power. Because essentially all they've done is they become the allocator of assets. They might allow that to be free market solutions like fintech companies that create lending solutions, or they might more likely decide to take a percentage of that and stimulate the markets that they want to keep alive. Because if you get rid of the bond markets, which you wouldn't, you just replace one form of money for another as people repay their loans, that can be reinvested into the same product in the same loan. But you have a reallocation of markets where essentially it stimulates the markets that the stable coin is used to support, or it has some more free market solutions based upon debt-free money rather than debt money this time.
Right. What is the timeline for this? Is it the next 5 years, 10 years? When do you think we'll see this in action?
That one is really hard to forecast because I've always been, since with Bitcoin, I've been bullish the whole way through, and we've seen 3 major bear markets, but it seems to come out in the end. I'm on the long-term trend here. I thought this would have happened a long time ago. I thought that the last financial crisis was a huge systemic risk event, and we didn't solve any of the problems that we had last time. We've now had a 10-year cycle of stock markets, bond markets, real estate reaching new highs in different markets. And it's all been based upon quantitative easing and not having solved any of the problems that caused the financial crisis in the first place. So what will be the trigger? What will be the systemic event? I think that there's something coming soon. We might get one more business cycle of traditional financial engineering, but I don't think we'll get 2.
Paul Marin writes in the chat, what's to stop the central banks from printing money now and buying Bitcoin?
Absolutely nothing. If they choose to do that, they could. And I believe there was another video that I created on the game of chicken between central banks, the different type of central banks. And, you've got the very small ones in islands like Bahamas or very small, ones. I believe that they're mining Bitcoin right now, and it only, not that particular one. I'm not trying to single out a central bank. But from my work with, seeing how small central banks are doing right now, the only reason why people are, hash rate is at all-time highs while prices are not reflecting a short-term profitable scenario is because I believe that longer-term players like central banks are mining cryptocurrency and Bitcoin right now. And I believe there will be a game of chicken where the last central bank, someone's accumulating a large position, someone's deciding to do it through mining. They're taking a percentage of their country's electricity, mining Bitcoin, accumulating a position, and then when they decide the timing's right, announce that they are now using Bitcoin as a reserve currency for their central bank alongside dollars and various other assets and gold. And then it becomes a game of chicken, just like we see with blockchain regulations, where one country announced we're supporting crypto, and then another country comes along and they all start competing. And then eventually you get the economies that have the most to lose, which is the dollars, the euro, the Japanese yen. But then the Japanese yen, they're being a bit more proactive, trying to get ahead of the regulations so that they can control this when it does happen. Then you have a game between central banks competing, and which policy that people make on blockchain right now, I believe will dictate who we see as the next world leaders when we have mass currency war. And the dollar try to competing with other countries, as we are seeing in currency wars right now.
and Bitcoin will become this black hole that just sucks in all value, because essentially what you could do is take out loan, put it in Bitcoin, and take out another loan and put it in Bitcoin. And this is what we might be seeing. This is something that many people I've talked to have discussed. Basically, this will devalue the fiat currency the more people do it, and that is how Bitcoin will become this black hole. Do you agree with that? Do you think Bitcoin will suck in all value as this black hole?
No, I believe I believe that there is going to be big wealth redistributions. But I believe one thing that governments or central banks have shown is the desire to make sure that the small person doesn't lose their deposit at a bank, and to use financial engineering in order to prop up the system. I believe in the end, we're going to end up in a hybrid system. And the hybrid system is going to be between government created money, as people think it is, but actually done through technology to take out the debt-based system. And then competition, where people are deciding, well, if I hold my money in fiat, yes, my rent is charged in dollars and I get paid in dollars, so I don't have to take currency risk. So therefore, people will start speculating a bit more, and there will be, it will be a trade-off, just like we see between privacy and all the problems of removing a middle person from money creation, versus money that you can control but has some downside in terms of my rent is in dollars, and if I receive Bitcoin, then I have some level of uncertainty about whether I can afford my rent based upon speculative prices. And people will have these trade-offs, and people are going to start really thinking about where they put their savings, rather than just being encouraged into debt. Remember the ICO boom was just an indication that young people are willing to invest their money when you create a product that they're interested in. Prior to that, they weren't going to invest in stocks. They weren't going to invest in bonds. They weren't going to invest in gold, or some might have, because they could never get on the ladder. They couldn't get their money for the mortgage. They were still in debt from their student loans. But somehow they managed to find and start thinking about savings and investing. Now, yes, it was ICOs. A lot of them were scams. But it was a shift in mindset of young people thinking about savings and investing for the first time. And therefore, they were delaying consumption and taking out loans and debt in order to invest in their favorite ICO or cryptocurrency. That is a shift in mental thinking that actually came as a result of the ICO trend. Hopefully, none of them got too wrecked and then left the market. Some of them will, but a percentage of them stay, and they'll be around for the next adoption curve.
What is your view on the Bitcoin standard by Saifedean Ammous? Do you think that he is projecting his vision correctly, or do you agree? Do you don't agree with him?
I think I think it's a fantastic piece of work. It's a great piece of work for you to understand different economic theories, and it's somewhat balanced. So yeah, it's something that everybody should read, and it outlines a few scenarios of how Bitcoin could become a standard. And these are all plausible scenarios when you understand the economics. So I think he's done a great job there.
People are asking in the chat, how do you think the halving will affect adoption? Not just the price, not just that we're seeing the stock to flow model play out and Bitcoin goes exponential. How do you think it will actually affect real adoption and real use cases, and not only speculation and not only leverage trading, and that people are more interested in buying and selling with leverage?
Yeah, so I mean, this is a really interesting question in terms of what's your definition of adoption. If your definition of adoption is that everyone in the world starts using this in order to make purchases and plan their finances around, I believe that the consumers will always think in the currency of the country they're in. So if you're in England, you're going to be thinking in pounds, or if you're a dollar person, you'll be converting pounds to dollars in your head. And so fiat currency still plays a role in terms of, if you're being charged in one currency and you earn in one currency, then you can take out currency risk by not converting out of into another currency. But the biggest impact it has is in the savings side, which is where you decide to relocate your savings. That's and then eventually, once the whole world is saving in a currency that has a multi-trillion-dollar market cap gives you the ability to own your own money, spend your own money. The whole world doesn't think it's a Ponzi scheme. It doesn't think it's a scam or a currency just for drug dealers. At that point, it can then get some of the properties of gold, and it can become a genuine store of value. Once it's a genuine store of value, then it can have more stable pricing, and you can use it as a medium of exchange.
We have another question from Tech Vision asking about Dubai and Bitcoin and saying, are there not private trillionaires in Dubai? So what is your view on that? Do you have any insights into how they're thinking? Because that is maybe one of the biggest wealth managers and wealth funds in the world right there.
I'm not particular area. I've got too much experience. I spoke in Dubai over the years at a Bitcoin conference. But of course, yeah, I mean, this is wealthy people are deciding whether they believe it or not. Responsible fund managers are going to have to decide what their Bitcoin strategy and approach is, especially as there are regulated ways of doing that with custody services now. And a responsible fund manager and rich people don't manage. Well, most rich people in Dubai don't manage their own money. They have family offices. Family offices, their job is just to find the right diversified portfolio to protect their wealth. And any responsible portfolio, I believe, in the current environment, should be hedged with some Bitcoin, whether you believe it or not, just in case it becomes a non-correlated asset class just by traditional portfolio theory.
That's very interesting, because I saw a website, I don't remember which one, where you could calculate how much you would have made compared to S&P 500 and how much the volatility will differ between your portfolio and S&P 500 if you just added 1-2% of Bitcoin into your portfolio. And it turned out that it makes financial sense. Mathematically, it makes sense to add a few percent of Bitcoin already today, because your returns will be the same as S&P 500, but your volatility will be lower. You will have lower standard deviation. I found it very interesting. And the more wealth managers discover that, and the more they understand that from their portfolio theory, they don't have to be Bitcoin believer. They don't have to really be on board with all the thesis of Bitcoin and censorship resistance and all of that, but just mathematically it makes sense for them already today. And in the next recession, we will have even more data and even more numbers when it comes to relationship between Bitcoin and the traditional markets. Let's see if we have more questions in the chat. Something I want to discuss a bit more is Bitfenix. It's the exchange that most people talk about. It's a bit controversial. I had Jesse, CEO of Kraken. He said that every business school should have a Bitfenix class because they have survived so much and they have been through a lot of things that were both positive and negative. So, for example, you mentioned the hack in 2016, and they gave their customers security tokens in order to reimburse them for the hack. They obviously have a lot of allegations, and now there is a lawsuit when it comes to Tether. You as an investor, what do you think about that? Have you ever thought about selling your stake, or what is your future vision for that company?
Yeah, so I got to disclaim that I am a shareholder in Bitfenix, so feel free to discount everything I say as self-interest and make your own decision. But Bitfenix is a company that was in it for the right reasons. They wanted to protect privacy, and they had many challenges by creating a non-US centric version of how people could engage in a cryptocurrency exchange. And by that, they've had many challenges, and the hack was probably one of my most favorite stories in crypto, and one of the more higher returning investments that I've made. For those of you that don't know the story, should I go through how the...
Yes, please.
So Bitfinex found itself in a scenario where it was missing 119,000 Bitcoin due to an integration they did with BitGo, where they were trying to increase the transparency and allow everyone to be able to prove that rather than storing everything in one cold wallet, segregating everyone's funds into a wallet where you could prove that Bitfinex had the reserves. There was a compromise in the API key in the integration, and they ended up in a dispute whereby 119,000 Bitcoins were stolen. Some of them, a very small amount of them, have been recovered recently, but they're still sat in the hacker's address at the moment.
And this was in 2016, just to get the historical perspective, or
Correct.
earlier.
This was 2016. Now, we had all been through the disaster of Mt. Gox, and we knew what effect it had on the market. So at BnkToTheFuture, we didn't want to go through that again. We didn't want to be held back another 5 years and have another Mt. Gox scenario. So we reached out to the Bitfenix team, who are incredibly resilient, incredibly intelligent, and they used financial engineering instead of traditional liquidation proceedings. They decided to, because they had lots of peer-to-peer loans, they were the first lending market in crypto for margin. They had enough reserves in dollars to cover the loss with their clients' funds, and they haircut everybody 36%. It was very unpopular, and it pissed a lot of people off. So what they did is they said that 36% will be replaced with, so the value at the time of all the loss was 72 million based upon the Bitcoin price at the time. They took that 72 million and created a token on Bitcoin through Omni, and they replaced that 72 million and said, here's a token which is a promise to repay $1 for every dollar you lost. And then they decided to take that token and trade it on Bitfinex. So people that didn't believe that Bitfinex could repay that dollar could sell their tokens. People that did believe that Bitfinex could repay that dollar could buy those tokens. And immediately the market crashed from $1 to 20 cents. So now the free market kicks in and people can purchase Bitfinex $1 debt at 20 cents on the dollar.
Interesting.
And essentially it became a prediction market for Bitfinex's recovery. If the price went up to $30, then it was a 30%. The market was predicting with 30% that they could repay $1 with that token. But then what we did is we contacted Bitfinex and we said, well, if anyone wants to convert that token, then they can convert it to equity in Bitfinex. We put together one of our SPV structures. And if you could buy a token for 20, 30 cents from the people that didn't believe Bitfinex could repay, and you could swap it for $1 worth of equity in the company. And so there was like an 80 to 70% arbitrage, and the arbitrage shrinks based upon the people's belief about whether Bitfinex could repay that dollar. Bitfinex, we went into a bull market. Bitfinex started to, trading really picked up because they didn't go into liquidation. They didn't go into bankruptcy. Within 2 weeks, they were trading again. They repaid a massive chunk of those tokens. So then the 72 million debt went down by about 10 million through trading profits. And then eventually the price started to go up. So people were accumulating the token at 40 cents, 50 cents, 60 cents, 70 cents. And people were swapping it in for equity until approximately $55 million of the total debt was converted into equity that were now shareholders in Bitfinex. And then eventually they took all the profits that were left over and they repaid the whole 72 million debt within a period of 6 months. And approximately 30% of the exchange was now owned by shareholders and customers that purchased this token. We have a secondary market on BnkToTheFuture whereby you can place buy and sell orders for these the companies that own stock in companies like Bitfinex. And it went up and people to a price of about $16. So there was, the most conservative was 20 cents to $1 in equity gains, 5x, then $1 to $16. And then Bitfinex took all of their profits from the bull market and paid it out to shareholders in dividends. And so there really was a complete free market solution that I believe should be covered in economics textbooks for years to come, of how financial engineering through the free market outperformed traditional liquidation proceedings and prevented the cryptocurrency market going into a Mt. Gox scenario again. And it was a real incredible thing to be involved with. And that's just one example of the types of things that this team does, because when they're faced with immense challenges, they look at how they can continue.
Fascinating. But I also think that they had a lot of issues with losses. I guess they had, because if I have money on Bitfinex, I have Bitcoin, I lose all my Bitcoin and they give me the security token. Day one, I have no clue. Basically, it's worthless. It goes from $1 to 20 cents, as you said. The market basically crashed that token, which promised me my $1 back for each token. So I can imagine most people were extremely angry and disappointed. So did Bitfinex see a lot of losses? How do you really deal with losses when you at the same time need to recover the losses, at the same time you need to be innovative in the marketplace so that you don't get outcompeted? How do you manage all of this? At the same time you have Tether, at the same time you have regulators coming after you and you need to adopt. So how do you do that?
Well, that's the Bitfinex board, and that's what they do. And that's the challenges that they are faced with when they wake up each morning, because they decided to push forward a non-US centric cryptocurrency exchange in an environment where if you don't bow down to certain regulations, then the banking system won't serve you, and therefore you have all these banking issues. And so they create innovation. They said, well, there's all these banking problems, let's create Tether. I know for years no one was using Tether. They pitched it to all the exchanges, no one wanted to use it. Then Binance came along and Bitfinex became the bank to all of the crypto-to-crypto exchanges, because they all built their growth on Tether, and there was actually a bank that was holding all those funds, and that was Bitfinex's relationship, where they had to go around and try and figure out a bank that would hold that $4 billion that went to 2 and grew very fast. And essentially, the crypto-to-crypto market, Binance and all these companies that you know and love today, they're the overnight success stories because Bitfinex was banking them.
Very interesting. Very interesting. At the same time, we recently saw another issue with this company where Bitfinex had their fiat. If I remember correctly, there was this person in Poland that got arrested for money laundering. So do you know what happened and why did it happen and what is the way forward for Bitfinex?
Yeah, so I went on CNBC at the time and shared my experience. But again, disclaimer, I'm a shareholder. I don't run the company. I don't operate the company. Maybe I've got information wrong here. But what I saw is that the Bitfinex had a banking challenge. When you suddenly have a lot of money because all the crypto-to-crypto exchanges are using you as a bank, you get a lot of exposure. Some banks see that as an opportunity. So there are banks that really depend on deposits and loans. Others see it as a threat. And so you're in this scenario where you're constantly, so they had banking challenges. They needed to move these vast sums of money to another bank. And then at the same time, your customers are demanding deposits and withdrawals. And if you can't pay those within a couple of days because of the quite right skepticism in the crypto markets from bad experience with all these exchanges, you end up in a scenario where you have to use some type of financial payments firm, and the only one that they could find at the time that would allow them to meet deposit and withdrawal demands was a company called Crypto Capital that some of the exchanges were using. And it turned out that Crypto Capital allegedly were doing really bad things with that money and teaching people the lesson that when you hold your money at a bank or a financial institution that may or may not be a bank, that they own your money, they can spend your money, and the monetary policy is based upon savings.
And here we're talking about hundreds of millions of dollars or tens of millions. How much money was lost in that company, Crypto Capital? At least temporarily lost.
So approximately, from the information that I've been told, $800 million was the float. Think of a crypto exchange like a hot wallet, cold wallet. Mm-hmm. You also need a hot wallet, cold wallet for fiat. You have your money at a bank that you consider to be the best place you can leave it, and then you have the hot wallet where you have to meet depositors and demand deposits and withdrawals. As the market changes very quickly in crypto, you get mass deposits or you get mass withdrawals, and they found themselves in a scenario where they had $800 million in the hot wallet. They were getting ready to move that to the cold wallet. And then when they asked to remove those funds, they were faced with Crypto Capital giving them every excuse in the world of why they can't move those funds.
Right. And for now, that money
used for allegedly criminal activity through crypto capital. So it just shows to the world what happens when you leave your money at a bank.
Right.
It turns out it wasn't a bank, and because of it was a payment institution and wasn't necessarily following some of the regulations to protect money when you do hold it at a bank, and that led to the issue.
So what is the status now? Is it that they're trying to recover the money, or money is basically lost? It's really no chance to recover it, or are they trying to use Tether to recover those losses? You see all of these different theories online. Do you know what's going on right now?
So the perspective that I see is that they were faced with a situation where the money that they thought were back in Tether, they could no longer withdraw because crypto capital wasn't allowing them to process those withdrawals. The hot wallet, was essentially that. So what did they do in order to make up for that? They decided to use legal engineering, I guess, and put two independent legal firms, one in Tether and one in Bitfenix. Now you can question the independence because similar management, but they constructed a fair market value loan from one to the other. I think they did make some mistakes in their communication around that. They've always had a PR issue. They've always, not really responded in great ways, to their detriment, their PR challenge. But they used that opportunity. They issued a loan, and then when they realised that the governments hold that money because it was seized from crypto capital for allegedly being involved in criminal activity or money laundering. They are fighting the case to reclaim that money from each of the government that is holding the money. In the meantime, they launched a token sale, and they had no other choice. They raised $1 billion through that token in a short period of time. They now repaid that money through the proceeds of the IEO, and they state that everything is back to 100% backing, in fact more.
Interesting. And so the IEO we're talking about is this new coin they launched. It is right now number 14 on CoinMarketCap, Unus Sed Leo. What kind of token is that? Is that a security or just some kind of utility token?
Yeah, so it's an exchange utility token where similar to Binance, where there's a model where the more the exchange grows, the more it can be utilized within the ecosystem, and there's some kind of burn mechanism. So yeah, it's a utility token, not a security.
Interesting.
Well, that's a debate, but I'm not going to get into that debate.
Got it. We discussed Kraken, Bitfenix. Let's talk about Coinbase. What is your insights into that? What is happening to Coinbase? From outside, it seems to me that they recently changed strategy to a very large extent and now have onboarded a lot of altcoins because maybe they realize that that is where a lot of money is. It's also interesting to see that you see exchanges such as Binance basically taking customers that Coinbase and Kraken have educated, because it's very expensive to educate a newcomer into crypto, how to use a private key, what is an address, how to send, how to store. And then you have Binance basically taking those educated customers and making a lot of money on that. So do you think Coinbase is trying to be more like an altcoin exchange? Are they trying to go into leverage maybe in the future? How do you see their position right now?
Yes, I mean, again, I don't have any inside information. We were later in the round, and these are non-voting, non-information right shares that we hold at BnkToTheFuture. So I don't have any more information other than what's publicly available and my experience. But Coinbase positioned himself to be involved in every single part of traditional finance. They actually acquired one of our US broker dealers, Keystone Capital Corporation, in order to enter the security token market. And they've been looking at every different part of this ecosystem. They're pursuing aggressive mergers and acquisitions. They do have the position as the most trusted centralized onboarding platform for new people that want to get into crypto. And then hopefully a percentage of those go on to eventually get hardware wallets And the DeFi space goes a little bit further, and crypto can be used as it was originally intended. But the reality is that Coinbase is the most trusted and most regulated onboarding process in crypto, with tens of millions of customers, and they're looking to extend out through mergers and acquisitions their entrance into lots of different places within the market. And then you have different types of exchanges. You have Binance, very different culture, very different beast. Came from the east rather than the west, which is a different way of doing business, and a more faster, leaner way, higher risk regulations, versus a non-US centric model like Bitfenix, and versus a model that sits somewhat in between US regulations, but also much more, of the original crypto philosophy with companies like Kraken. And then you've got more European centric ones like Bitstamp. Again, this kind of goes through the key. Key is to be diversified and into as many parts of the ecosystem, and come from a philosophy of where you think the general market is going next, and hopefully the companies that you invested in go up with that if they're still a part of it.
Some exchanges, for example, Binance, BitMEX, Bybit, and a few others, they're not very strict with KYC, and for a good reason, because people don't want to do KYC. The conversion is way better without KYC. Then you have Kraken, Coinbase, I guess Bitstamp as well, who are following it much more strictly. Do you think the exchanges that are not 100% compliant with KYC will even survive? Because if you look at Poloniex, I heard that that's not confirmed, but I think Jesse told in the interview that, or someone else, that they had a lot of issues with regulators, and they could not move fast enough to be innovative with this next bull run, because they had so much trouble with their compliance. So how do you view that? Because it's a risk you can take right now. You can move very quickly. You can get a lot of customers without KYC, but you might be burned in the future. So what is your outlook?
Yeah, so I should disclose as well, we're a shareholder in Circle, who owned Poloniex before it was recently sold from the company.
To Tron? Or who was it sold to? Is it Tron?
A group of investors, and Justin Sung said that he was one of the people behind the group of people that wanted to take over that exchange.
Interesting.
And so the different exchanges, it is that, so firstly, there is no future. The governments do care about money laundering. That's not about to change, no matter what happens in the financial system, whether you are philosophically aligned with it or not. If you are a centralized institution providing financial services, you are going to be regulated. There are definitely going to be competition from decentralized finance solutions. But if you are a centralized institution, you're going to be regulated. And one of the reasons BnkToTheFuture is still here from 2010 is because we had the right balance between supporting innovative companies, but also making sure that we're doing that in compliance with securities laws and anti-money laundering laws and everything that goes along with it, which is a huge headache, a huge cost to all the companies.
Yes.
But it's something that you have to do if you still want to be here for the long term. And so the trend towards anti-money laundering is only going to get greater and greater and greater, especially, it might be done at the central bank level when they have their stable coins and it's automated into the protocol, and maybe governments control all the KYC through fintech companies. But if you are, fighting the KYC trend, you're all going to have a Poloniex moment when you need to adjust and you need to fix the policies. And so other companies that we invested in were companies like CoinFirm and Trustee and BlockPass are the type of companies we're looking at, because they have solutions that allow these exchanges to remain fairly innovative and use financial technology to automate a lot of their compliance without slowing down the process too much. But we're all of these exchanges are headed towards being more and more regulated, and at some point you need to adjust to that, or you're going to be in a jurisdiction that allows you to operate that way, and you're just dealing with the local people eventually.
Something that is very interesting right now in the market is the dominance of leverage platforms like BitMEX, Bybit, and others. You have Bakkt coming out as well, and some people are saying that because people are not raising the spot markets anymore to the same extent that they were before, it means that we will have a more difficult time to enter the next true bull run. Do you agree with that? What is your view on the situation with, for example, Bakkt, and just the fact that all retail investors love leverage? It's really the 2019 trend.
Yeah. So again, I used to be a market maker on the London Stock Exchange, and I soon learned that with trading, the 10% of insiders make all the money at the expense of 90% of retail that don't know what they're doing. And when I was a market maker on the stock exchange, we were moving prices in order to take advantage of such trends, because insiders still make all the money even in regulated markets at the expense of retail, or they're a long-term investor that rides out the trends, and therefore they don't really care about the short-term insider movements. But so since then, I've never been an active trader. I've been more of an investor than a trader. But there's no doubt, looking at some of the trends, I haven't done any deep analysis. I'm sure people have done greater work on this. But we can see how cryptocurrency prices change when futures markets are launched and they get more traction. And so whenever we get one of these major future markets or announced or launched, we seem to have radical changes in the behavior of Bitcoin and cryptocurrency prices. So I'm sure that people have done some great work on those trends. But again, as a short-term trader, you need to concern yourself with these things. As a long-term investor, I don't concern myself with these things too much. I think the major long-term trends that we're going to be seeing, so, our first big trend that worked for us was obviously Bitcoin and sound money. We then diversified into the exchanges, which was our next big winner in terms of unicorns in equity. Then there was Ethereum, then there was the ICO boom. But I think that now that is correction, we're going to see two major markets that we're trying to get ahead of. Is the lending market for, in the cryptocurrency market, which means that you're having non-debt-based loans as opposed to debt-based loans at a bank, both decentralized and centralized, and then the security token industry. So if you look at ICOs, it was around about 2013 that we were looking at the first ICO, which was Mastercoin, allowing people to create smart contracts on Bitcoin and tokens. And when Vitalik got involved in that to create Ethereum, there was approximately between 2012-13 and 2017, a 4 or 5 year gap between the markets getting liquid versus the idea being conceived. I think we're in a similar trend here with security tokens. And so I think, you're looking at a 4 to 5 year horizon until they become liquid again. But all of the wealth from BnkToTheFuture investors and people that are investing in this industry and myself was investing in a long-term trend about 3 to 4 or 5 years before it actually happened, and being diversified across the different players in the ecosystem, as well as the underlying asset, whether it be Bitcoin or whatever it may be.
There's an interesting question in the chat from Mad Cow. How do you have a loan without debt?
So there's a distinction between a loan of money that was created debt-free. So it's the money creation process that I'm referring to. I understand that's a bit confusing. So when a government creates cash and coins, they just print them. They don't lend them. They sell them to an ATM and the bank buys it for money that was created as debt. But, that is money that's not backed by debt. That $10 note exists. And if you lend it to somebody, you have issued a loan on money that wasn't backed by debt. It is debt in itself, but it's not created as debt. And so if you have a debt-free money supply, then you can have loans that are not backed by debt, if that makes sense. I know it's a bit of a head spinner.
Right. So you're seeing security tokens, you're seeing lending. I think what's interesting right now is just the arbitrage between fiat interest rates, the ones you get at your bank, 0 in Europe. Maybe it's a bit positive in US still, but it's a fraction of a percent. And DeFi, where you can get 5-10%. Do you think it will continue, or will this arbitrage go away slowly?
Yeah, I mean, the arbitrage will go away slowly as adoption prevails, till eventually, if it reaches the size of all the traditional financial system, then it will normalize around, again, interest rates, they're determined either fully free market, but then if you have a government created money supply, then you have crony capitalism that adjusts that interferes in these market forces. Whether you're left ring or right ring and you believe in less government or more government, these things still happen on both sides. So I believe it will normalize, but again, that is also dependent upon the actions of governments eventually.
Mm-hmm. I had this discussion with a friend just a few weeks ago about that there should be a company that takes fiat and puts it into DeFi and then gives interest to fiat depositors, but not all the interest they get from DeFi. Do you think that's a valid business idea?
Absolutely. I'm sure that that business exists or is being created right now. You should create it, Ivan, but there is a risk in there. The reason you're receiving higher returns is because there's so many inherent risks in these products that we don't fully understand. And one thing that crypto has shown me is that anytime you think you know something, the crypto market never ceases to amaze me, because every time you think you know something, logic doesn't necessarily prevail in our market.
But right now you do have DeFi, and when you have a Compound protocol or MakerDAO, you actually need to deposit more than you get back. What kind of use case is that? I understand that it might be useful for leverage. I deposit Ethereum, I get some DAI, I buy even more Ethereum. What other use cases are there for this? Because obviously people are doing it a lot because there's so many millions of dollars in MakerDAO. But who is actually taking those loans and what are they used for, do you think?
Yeah, so this is a side effect of a couple of trends. The first trend is that people have a long-term vision of what that cryptocurrency that they're using as a collateral is worth. And they believe that the opportunity cost of selling it today is different to the opportunity cost of selling it or using it tomorrow. So I know many people that really buy into the long-term vision of Bitcoin, but don't necessarily want to sell that Bitcoin, but they do need to have enough fiat in order to ride out the wave, meet their mortgage demands or purchase a house or whatever it may be. So this is a trend of people that have accumulated wealth that want to keep it in crypto. They want to access money, but they don't want to sell their crypto, which is why they're depositing, borrowing more than with a higher level of collateral. So it's not, and what else is that? Well, that's a shift towards the saving economy. So with traditional fiat money, your best strategy is to borrow as much and to spend as much as possible, because the way that monetary policy works is it's going to be worth less in the future. And obviously this gets more complicated when you're dealing with international markets and one currency versus another, but just in your domestic currency, that the sensible strategy is to take on debt and to spend as much as possible, because you'll repay a lower amount in the future based upon this monetary policy. With crypto, it's quite the opposite if you believe in it. Obviously, some still don't. They think they won't. But if you believe in the value of a scarce asset where people can own their own money and spend their own money with a fixed supply that can't be changed and is sufficiently decentralized in order to not be interfered with other parties, then you want to save that, but you need to do some spending right now. And the market is growing based upon that. And so, yeah, there's a couple of trends, a movement towards a savings-based economy because of its the fixed money supply characteristic, and also a desire to get returns, take higher risks with that, but not necessarily want to do that in a centralized way, because you still believe in the crypto vision, and there might be a way of doing this in a decentralized way, but obviously there's lots more risks involved in the black swan events that we don't know about, just like the DAO. Or
Interesting. So you mean that people take out DAI, they don't have to sell their Ethereum, they can instead sell DAI for fiat and then pay their mortgage and their bills, and that is the main use case for loans right now on DeFi.
That's what I see.
Will we ever get to a point where you can actually do mortgage? I guess maybe in the future where you have tokenized the real estate, you can put it into a smart contract. Is that what we're looking at? What is your vision for DeFi long term?
Absolutely. I mean, I think we'll be able to do this. So the centralized and decentralized markets will always compete. There are advantages to holding fiat money in a that is very centralized. There are advantages and disadvantages to holding Bitcoin. And so I think that you're going to have these. Both markets will be, which is why we invested in companies that are building regulated solutions as well as looking at the decentralized solutions, because one builds the other. It's like when a private stablecoin like Facebook Libra project, let's say, is created, it requires governments and other companies to compete and be more honest with their fiat currencies, because they're competing with someone else that they don't want to necessarily put that much control over to. And essentially what Bitcoin does, a side effect of what Bitcoin did, is when you give people an exit to the traditional financial system, it becomes the regulator of the regulator. When you have the choice between your consumers' exodus out of fiat money into Bitcoin, then you need to get more responsible with your fiat money. You need to get more innovative with your fiat money. And you need to engage in the crypto markets and do different things. So really, it's not that Bitcoin takes away fiat money. While it might do, I think that would hurt a lot of people in the way. I don't think everyone's suited to this product right now, or this thing right now. I think everyone needs to learn. But there are going to be centralized solutions that improves the user experience. But the important point is, by having a decentralized system that it regulates the regulator, it keeps fiat currencies more honest, it keeps central banks more honest, and it leads to a better result, I believe, overall when people have choice.
Right. Very interesting. We have many questions in the chat. I also have a very important question I want to ask, and let's see for how longer we will do this. How much time do you have, Simon?
I'll carry on.
Perfect. Because the thing is, I need to go to the bathroom. Do you want to take a break as well, just 2 minutes, or do you want to answer some chat while I'm going?
I'll take a quick break, I think.
Okay, perfect, guys. We'll take a big break. You can do some push-ups, do some, stretching. I'll go to the bathroom. Simon will also do something. I'll see you in 1-2 minutes. Okay. See you, guys.
So maybe while we're waiting, rather than have dead space, I could cover a brief topic that I'm sure Ivan will be happy with. I talked about these 3 problems with money and how Bitcoin solves them. And that is that, the original reason that we got into this, and even discussed at the first Bitcoin conference I spoke at, was these 3 different types of money. And I believe that people need to learn and understand more. And that is that when you deposit your money with a bank, the bank is actually the legal owner of your money. That's how they're able to bail in, and that's how they're able to do that. When you hold your money in Bitcoin, as long as you don't hold it with an exchange, then you are the owner of that money, and it can be stolen from you, it can be taken from you. You need to secure that, but it's one of the difference. The second major difference is that banks, when you deposit your money at a bank, they can actually spend it as they choose. And what they tend to do is allocate that money to the lowest risk, highest return asset class, which traditionally, with most banks' balance sheet, is 40% real estate and property. Yeah, Ivan, while you're away, rather than dead space, I just did a bit more on the difference between Bitcoin and banking.
Perfect. Let's continue.
Okay. And so because of that, that's why you have property markets that are always going up, because 40% of everyone's deposit is used to simulate the mortgage markets. On the other side, with Bitcoin, you have a peer-to-peer electronic cash system where you can transact peer-to-peer as you choose. And then the other one is the monetary policy with increasing supply versus fixed supply, which leads to debt versus savings encouragement.
Interesting. That is something that I really want to dive a bit deeper into, because you mentioned that we're going from a spending economy into a savings economy. At the same time, I just came back from Japan. They have an issue with the fact that people are not spending a lot. We have deflation in Japan. So you see this argument a lot, that inflationary currencies and inflationary systems are actually good for commerce, for innovation, for societal growth. Is that true or not true?
It is 100% true under a debt-based monetary system, where in order to have more money, you have to have more debt. And if you have less debt, you have less money when people repay their loans. What we don't know, and what some of the theorizing in books like Saifedean Ammous's Bitcoin Standard and Austrian economists and various other economists and economic theories, is what happens when you do have the exact money supply that you have today, but it's not based upon debt. And that is the next economic experiment that I believe that we will see in the history of finance and monetary policy, which we haven't seen yet. So, but when you have that money, can the market can the free market provide those loans? There can still be government intervention. It's just in a monetary system where a loan creates a digital currency like it does today at a bank, then you need to continually increase that supply in order to have economic booms. And because the way to create money is through the lending markets, you conflate loans with economic growth, which is true under the existing system.
So in the future, when we go to a Bitcoin-based system where Bitcoin is the reserve currency, and then, as you say, probably there will be fiat currencies as well, will we have the situation where people are saving more and thus spending less, and will that lead to a decrease in economic transactions? How do you think it will change? What will be the behavior of people, and how will it affect the economy as a whole?
Yeah, I don't think anyone knows for certainty. And the interesting thing about why I return to economics is because we map our economies upon economic models that we believe to be the truth. But the science or the art, more like, of economics has never been resolved. You have the classical school of thought, you have the Keynesian school of thought, you have the Austrian school of thought, and everybody has opinions about which one is right in terms of organizing economies. And then you even have capitalism, the right mix between socialism and capitalism. These are debates that are still being argued within universities and economic papers and academics that are unresolved. So no one truly has the answer. It's just it's a reallocation of assets, and where there is a demand. If you're an Austrian economist, or a capitalist. A classical economist, then you believe that the free market is the best way of solving all problems. And then that also leads to more Keynesian school of where you believe that the market fails and the government should intervene to stimulate markets that aren't performing functional, that are pivotal to society. And so that is what will determine whether we go more, Austrian, more classical, more communist, more capitalist, more socialist, more Keynesian. That will determine which markets prevail versus a full free market where certain needs are not met, but the market dictates what is needed.
Let's go back to the early days of Bitcoin and the vision you had for this industry compared to what it is right now. We said a few words about Bitcoin Cash and Bitcoin SV in the beginning of the stream. Let's get a bit deeper into that, because I have one of my biggest fans, a guy who always leaves nice messages under my videos. He's a Bitcoin SV supporter. He just called us clowns and charlatans. But anyway, he's saying that loads of garbage. BTC cannot be used to transact when you want for everyone. Wake up, sheeple. These clowns are charlatans and they're lying to you about what is Bitcoin. Bitcoin is Bitcoin, Satoshi's vision. So has your view changed on Bitcoin? Do you agree with Bitcoin Cash, Bitcoin SV? Because you cannot deny that, some of the heavyweight people, like you see Mike Hearn left Bitcoin, Roger Ver went to Bitcoin Cash, Craig, you can argue as well. So many of them left Bitcoin for their alternative Bitcoin altcoins. So what is your view on that? Because you were in the early days as well.
Yeah, this is, it's been a pretty upsetting again, it's led to everyone's increased understanding of what Bitcoin is and what Bitcoin does. And firstly, your Bitcoin SV guy, I'm not lying. I'm just giving you my perception.
Right.
and you could turn out to be completely right. I could be completely wrong. But yeah, not trying to lie here, just trying to give my perception and my commentary of where I think it goes. And everyone has the right to sell all their Bitcoin, put it in Bitcoin SV, and you can do that if you choose. But my perception is that Bitcoin was created at a time when nobody cared and no one was speculating on it. And the original miners were truly computer scientists and geeks. And it led to some, obviously there was some early centralization with Satoshi mining most of the Bitcoin, and then it was a completely centralized network. And over time, it became more and more decentralized. And obviously, then ASIC started to kick in, and you started to have economies of scale in Bitcoin mining. But what the debate did prove, what the scaling debate proved, is that over a period of time, a certain group of companies wanted Bitcoin to be a certain way. Companies like Coinbase, blockchain.com, they relied on low transaction fees in order to give the fees for free in order to maintain a user experience. But then eventually, as the fees started to go up, they couldn't sustain that model. So they had to introduce problems in the user experience by charging the fee on, and then people don't understand the difference between low, high, and it just interferes in the user experience they wanted to create. So therefore, the companies colluded around, trying to influence the developers into getting Bitcoin in the direction that they thought. And that was what the original Satoshi roundtables and all the Hong Kong events I was at, where the scaling Bitcoin ones and where all these agreements were. At the same time, you've got that decentralized effect where there's proven that the developers wanted a certain thing, the miners wanted a certain thing, the companies wanted a certain thing, users wanted a certain thing. And the reason no one could get their way is because there was a sufficient level of decentralization, even if there are pockets of centralization. And so Bitcoin has achieved that on a scale that no one else has achieved. And I believe that everything else that is created is associated with a character, was created at a time when there was mass speculation, and therefore pockets were filled to actually push things in certain agendas. And therefore that person or that group of people become the bottleneck towards it actually becoming something like sound money. And so if big blocks were the right way or small blocks were the right way, I'm grateful that we get to see these experiments in different currencies. But my belief is whatever turns out to be the right model will eventually be implemented on Bitcoin, which is our only world's best shot we have at achieving sound money through this technology, from my perspective. So these are all things that can show the way. And I just hope that egos in different parts of the ecosystem don't prevent Bitcoin from doing what it does. But then remember, the reason it couldn't change is because it couldn't reach consensus. And you've got to hit consensus. And the fact that Bitcoin can't reach consensus on so many things is the very thing that might make it sound money in the end, because it can't be controlled by any one group of parties.
As you mentioned, it's a free market. If you want bigger blocks, you can use bigger blocks. If you want programmability on Bitcoin, you can use that as well with Bitcoin Cash and SV. So the market will show, but the market is still in consensus that Bitcoin is Bitcoin and not Bitcoin Cash or Bitcoin SV. If you Google or search engine Bitcoin, you get the price of Bitcoin and not Bitcoin Cash or Bitcoin SV. So it's just another proof of social consensus, which at the end of the day is what is most important. At the end of the day, it is social consensus. And it's interesting because not many people are highlighting social consensus enough, because at the end of the day, it's all about social consensus. I mean, we can change the 21 million cap if we want, if there is social consensus for that. So that is the most important thing. Another interesting question is about privacy coins. Chris has asked it a few times. What do you think about privacy by default, and where do you see them in your future? He's asking about Monero and Dash and the other privacy coins. How do you view them? Because my view is that exchanges might have to delist them soon if they are to be compliant.
Yeah, exactly that. So it's an interesting trend to explore. So they're probably going to be the coins that are most utility, because you won't be able to speculate them on centralized exchanges. You might be able to trade them on decentralized exchanges, but in the future, the governments, when they implement more and more regulations and as more and more things happen as a currency becomes more and more adopted, new regulations are going to be implemented, and eventually I believe centralized exchanges probably won't be able to trade these things unless we end up in some kind of innovative model where governments switch towards identity happening on a blockchain through some kind of proof identity algorithm. But the only problem with that is AML is not really the only agenda, it's tax. So if AML was the only agenda, we could create a brilliant technological solution where people could maintain privacy at the same time as achieving anti-money laundering compliance. But this is also about tax collection, which means that they do want the data. They want to, they don't want to encourage privacy coins. And so they will move more to utility than speculation, because centralized exchanges won't be able to support a price, is where I see these things eventually going. Maybe we get radical changes from governments around the world in their attitude towards anti-money laundering and privacy. And maybe, when services like Libra launch and people start to see what happens when someone owns all the data and somebody also becomes the largest bank in the world, that there'll be a shift towards more privacy-centric solutions as more controversy happens. But that debate between, again, it happens in our company. We have to remain anti-money laundering compliant, but at the same time, there's laws like GDPR where you have to remain more privacy.
Right.
And in order to be fully compliant with both of them, you actually can't. So you have to decide, well, anti-money laundering laws send you to prison. GDPR laws give you a fine. So therefore, we have to choose anti-money laundering laws when there's not a conflict between GDPR and AML.
Interesting. Jared asks about security tokens. Let's talk more about security tokens from the beginning, because to me, it's interesting that security tokens can add more liquidity. It can be a global market. You don't need to have this complicated infrastructure with exchange, with clearinghouses, with brokers. Is that the main innovation, or what is main innovation with security tokens according to you?
I really hope those things happen, but regulators are just looking for people to implement all of those within a model of a token. So you still have those brokers, you still have custodians, that's where regulations are moving. One of the main value propositions. So when I think about the security token market, there's several things that I think it needs to achieve. One, eventually you can have tokenized everything and equity. But when you speak to an institutional investor and pitch them a security token, if the investment makes sense, they see the token as annoying and a hindrance.
Yes.
They'd rather just have the traditional asset class if it makes sense. When you pitch a security token to a Bitcoiner and say, hey, why don't you invest some of your Bitcoin in a 6% annual return REIT with low risk that is tokenized, they say, screw you, I'd rather hold my Bitcoin. So the market for security tokens for traditional assets will eventually come, but I believe it's going to be catalyzed by doing something that couldn't be done before. So if you look at the Bitfenix scenario, that was doing something with a security token that couldn't be done before, or in an efficient way. And I believe the first wave of innovation is in exactly that. So, paying Bitcoin dividends as a percentage of revenue, and structuring products. This is a lot of things that we're working on, is how can you make not equity a tokenized product, but a better product? Because one thing we do know, if you look at the BnkToTheFuture secondary market, we make a market in some of the largest companies in crypto for qualifying investors. There tends to be a liquidity discount to the underlying valuation, because equity is a longer term asset class and people start to meet liquidity needs. So even if they still believe in the company, they like to sell it at a discount to what the venture capitalists might be investing in. So through BnkToTheFuture, you can actually buy it cheaper than the venture capitalists can get it, because you might not be investing at such size or direct. So you tend to get liquidity discounts. So when people are pitching security tokens and they say, oh, you can get increased liquidity, a lot of investors will know, well, that actually leads to a depression of the price if you can't get enough liquidity. And therefore, it might not necessarily be an improvement. So you've got to figure out what's a security token that addresses who the investor is, at the same time as factoring in that there is no liquidity in these things, even though you're promising liquidity at the moment. And so the investment has to make sense on its own. And so that's a lot of what we're working on, is how to build the next security tokens that make sense to crypto investors. And so, makes things like equity better products. One of those is interoperability between exchanges. Other is being able to automate the payment of revenue shares, while also maintaining a mechanism to get back into equity, and really doing what ICOs couldn't do, which is, one of the interesting things about equity. So we've got many companies at BnkToTheFuture. For example, take Shapeshift. So we did 3 funding rounds in Shapeshift from the early beginning, and they recently launched their Fox token. In most of these companies, a supply of the token is reserved for shareholders. So you get the upside of the equity. You also tend to get some kind of bonus tokens, and they're subject to lock-in, so it encourages longer-term thinking. But really, equity was the legal contract that got you the right to the token. And so, another example, we've got Ripple Labs on our secondary market through our SPV. If you look at the value of the XRP that they hold, it's worth approximately $15 billion. The company is currently valued on our secondary market at approximately $4 billion. So you've got an $8 billion asset plus whatever they create, whether they end up disrupting SWIFT or whatever they're doing for banks. Markets create these discounted scenarios that allow people to get in assets at discounts, is what I've seen from our experience so far, rather than the liquidity premium and the liquidity existing. So everything has to make sense. And that's the challenge that the security token industry needs to go through now, on top of creating all the ecosystem, all the regulations and all the challenges around that. We've been doing securities laws since 2010, and we're still acquiring different licenses in different countries and building infrastructure that allows for this global investing in compliance with securities laws. We've been at it for almost a decade now.
Right. So that could be the next big thing that will wake up a lot of people to the use cases of this industry. We have a chat donation from Ron Burgundy saying, thanks for the intro, Ivan. Simon is excellent. Thank you for the donation, Ron. So security tokens, they are, I get your points, but at the same time, what happens if I lose my private key? Most people will lose their private key at some point in time, especially if they're moving from traditional finance. So usually when you do security tokens, there is no usual at the moment because there is no standard. But if we imagine there is a standard for security tokens that everyone is using, all the different platforms, will you be able to recover your funds through a central entity? How will it work, do you think, if I lose my private key, for example?
Yeah, so again, this is the trend of our governments and regulators around the world going to allow investment products to become bearer assets again. The answer is no. The government over the years has implemented procedures to allow them to collect taxes, and anti-money laundering procedures has got stricter and stricter over time. That trend is not about to reverse, especially when all cash becomes digital and everything's digital. Those trends are not about to reverse. So I don't believe that they'll move back to bearer assets. However, there can be decentralized products competing with centralized products. I don't think a decentralized product, maybe for investment products, can operate in a fully decentralized way in the future. They will compete with each other. But the centralized version, in my experience, is not going to change in terms of their policies on whether an asset can be owned without an intermediary because of anti-money launderers and tax collection.
Got it.
So every regulated institution, so we're investors, we did the Securities funding round on BnkToTheFuture. We invested in Polymath, and many different players that we're looking at in the security token ecosystem. As soon as they get their license, they have to switch to a KYC model following a backup. For example, I know from some people that were dealing with FINRA that wanted to settle assets on the blockchain, the regulated institution said it settles on Ethereum, but then the regulator made them print off a copy of Ethereum and keep it the blockchain, keep it in the filing as a backup record, so that they can default back to the backup record in case there's a problem.
Interesting. But so I think what's missing is the standard. The reason why ICOs got so big is because ERC20 is the standard. Everyone is using it. All exchanges know how to integrate it. As soon as you have a new token, it's on all exchanges because it's very easy to integrate. Who is going to build that standard? Because it doesn't matter if Polymath have their own. Then you have T0 and others. They have their own standard, and there are so many different ways you can do a security token in. So when do you think we'll see a standard? Is anyone working together to create the industry-wide technological standard, but also compliance standard, and how we integrate security tokens into traditional securities and those markets?
Yeah, so one of the companies we acquired this year was a company called Diacall, and Diacall is a corporate finance security token company, regulated company that's working to on such standards, and a legal standard that developers can adopt when developing their security tokens. I'm looking at, so what I'm betting on, and I could be wrong, is that they're going to be done in 3 different ways. There's definitely going to be an Ethereum-based standard that will emerge and get traction in my perspective. I'm very bullish early with no evidence to back it up, but we did some recent integrations with Liquid for our security token wallet, the BF wallet on iOS and Android. And I think that tokens built upon Bitcoin is a really important part of it. So I think that Liquid is an interesting perspective. We also invested in Rootstock, RSK. And I think that there is going to be a Bitcoin solution that I believe will end up being the big standard that wins. But again, these are very hard things to predict and forecast. I think there will be an Ethereum standard that prevails and wins. And I think there'll be lots of centralized solutions that use distributed ledger technology for clearing in a centralized way between a group of node operators and all sorts of strange, Internet of the internet models that will be disrupted away or maybe prevail.
What speaks for Ethereum to a large extent is DeFi, because you build your security token on Ethereum. Now it's compatible with everything that is already existing on Ethereum, and people can now combine MakerDAO and your security token, or Compound and your security token. I think that when it comes to all of this, when it comes to this ecosystem that is building this huge network effect, Ethereum is really number one. And that's, I read an interesting thought from Ryan Adams, I think, or Eric Wall, don't remember exactly who said that Ethereum is the biggest Bitcoin sidechain because you have wrapped Bitcoin through BitGo custody. So what do you think about that? Do you think that Bitcoin will have its own ecosystem of DeFi going forward, for example, on Liquid and other sidechains, or will it be more integrated with Ethereum DeFi space?
Yeah, I think the competition between Bitcoin and Ethereum is about to get a bit more interesting with the DeFi space. Everything's on Ethereum right now. They've got by far the larger development community in this space, and they've got most of the products in the space. And I do believe that while Bitcoin started with becoming, or ended with becoming, our world's best shot at achieving sound money, it looks like Ethereum is becoming the disruption for capital markets. But I do think we've got a really interesting thing ahead. And personally, I'm actually speculatively betting on a lot of this infrastructure moving over to, being built upon Bitcoin through interesting different side chains and innovation and things there. I think that in the end, this does move to the protocol that eventually maybe central banks will end up be using as reserve currencies. Whether we need a different protocol, there will definitely be competing protocols. But whether Ethereum captures all the capital markets, ICO, STO now, and Bitcoin ends up just achieving the sound money use case, again, I think you want to be diversified into both. My speculative bet is that a lot of this is going to move over to Bitcoin at some point.
Interesting. And we saw a few projects already, like Kim.com project, although when I met Tone Weiss in Singapore, he said that he convinced Kim.com to not move forward with the project. So I don't know, do you have any information on Kim.com project? Because he was building on Liquid.
Yeah, so we were the seed investors in the K.IM project, and we were advising them over the years in terms of where they go next. They had several distractions. They originally wanted to build content monetization and sharing platform. The reason I got interested in K.IM actually is because I did a simple calculation. So I wrote the first book, BnkToTheFuture, which was a book in the first published book that included Bitcoin. The first draft was 2010. The English version was released in end of 2011, I believe. And I noticed that in the 10 years or less, 8 years, whatever it is, I've only received one check from my publisher. And it was for about $1,000 from the Mandarin version that sold hundreds of thousands of copies. The English version, I've never actually received any money. The publisher and Amazon and all these people have, but I've never actually received any. When K.IM came up with a way of taking your content and having an encrypted file in an encrypted payment, also into an encrypted file shop, I did some calculation. I said, if I had put my book and sold it for $10, $20 from the moment it did and kept all the Bitcoin, rather than $1,000, I probably have about $10 million worth of Bitcoin right now. And so for me, the use case of allowing artists to monetize some of their content and suck people into Bitcoin, whereby eventually the Bitcoin becomes worth more, and then they are incentivized to actually go to an exchange and figure out how to use it. But earning it is a lot easier than trying to buy it on an exchange. So I support these use cases. But yeah, so we were advising them to do stuff on Liquid. They did a Lightning integration. They went through several distractions and came back full circle. But then, the IEO was pulled when they saw some of the recent legal cases with ICOs, and as that industry unfolds. Hopefully they'll be coming back with a security token, and all the work that they did was based upon Liquid. So they're
very interesting. What I like about K.IM is that you don't have to use their token. You can receive Bitcoin, as you say, for your content. So that is a very big thing, and maybe it's gonna be a new trend, as you say, that more and more people actually build on top of Bitcoin through sidechains such as Liquid. I had an interesting comment here in the chat. The thing is, we do have a battle in the chat right now with Bitcoin SV versus everything else. So the question is, do you think Craig Wright is Satoshi? Classic question.
Oh, Jesus, you can make me answer that one. I think there's enough evidence to suggest that he was around at a very important time in Bitcoin's history. Now, whether he was the T-boy to a group of people that are now dead, is unknown, but whether I don't think he is Satoshi. I do think he was around, and therefore giving him enough to maybe, again, this is all speculative, I don't know anything that you don't know, to maybe wait for certain people to die, whereby he could get a bit more credit. But then again, I don't want to be involved in a lawsuit right now. So
gotta be careful. But at the same time, do you think that Satoshi is dead? Not speaking about Craig Wright, but generally, because if he's not dead, then he has 5% of the total supply, which is a bit concerning, to be honest with you. It's not something that many people talk about, but it's 5%. Yeah, yes, the code is open source. He cannot change the code, but he has 1 million Bitcoin approximately. So what is your view on that?
Yeah, and certainly that is something that is unknown. My personal perspective, again, crypto markets always surprise you, but my personal perspective is that those private keys cannot be moved, because if someone can control them, then the consequence of it would be pretty crazy. If they were sent to an exchange or Binance or Bitfenix.
Right.
And so they're pretty much unusable from that sense if you want to maintain the value. But also, I personally believe that the private keys are somewhere that they can't be accessed. But I've got no inside information on that. It's pure speculation and hearsay. What I can say is that every other digital currency has the equivalent of a Satoshi Nakamoto, but much worse. So in the case of Bitcoin Cash, it was Bitmain that accumulated all the Bitcoin and purchased all the Bitcoin, and accumulated more than Satoshi Nakamoto on top of all the Bitcoin Cash that they had. And we saw during the Bitcoin Cash SV wars that there were a few players that were controlling all the hash power, that controlled the markets. And that was Calvin Ayre and Craig Wright in the case of Bitcoin SV. So if you have those objections, they're a lot worse than other things.
Interesting. Yes, I think so too, but at the same time, nobody really knows, and it's still a mystery. And it's both good that we have an anonymous founder, but this thing with 1 million Bitcoin is something that is concerning to many people who enter it. But at the same time, you gotta have psyche of steel not to move your money through all of the bull and the bear cycles. So probably they are not recoverable at all, those keys. That being said, Simon, we're almost at 2 hours. Are we above 2 hours? Yes, we're at 2 hours, 15 minutes. Any final remarks before we wrap this interview up? Because it has been an amazing time speaking with you. I've learned a lot, and people say that I speak slowly in this video. That's because I'm learning, guys. Normally when I'm having my streams, I'm educating. Now I'm learning. That is why I need to process slower. That being said, Simon, any other final remarks before we wrap this up?
Yeah, I can't believe we managed to speak for over 2 hours. That's
amazing.
And it just shows that, the exciting time. Look, we're in bull markets, bear markets. I personally seen my $30 Bitcoin crash to $3, and I've seen my $1,250 Bitcoin crash to $250 over an extended bear market. I've now seen my $20,000 Bitcoin crash to $3,000, and I expect my $100,000 Bitcoin to crash to $20,000 or something in the future. But really, the interesting part about this, the long-term vision, is that this is the most exciting time to be alive in financial history. We're going to see more change in finance in our lifetime than anyone has ever seen. And unfortunately, like to speculate or not, we are in a speculative economy, because if you just leave your money in a bank, you're betting on the credit risk of that bank and the fact that governments will continue to push QE into eventually get into property markets. If you're relying on your pension, then you're betting on the industry continually pushing QE money into stocks and bonds. If you're betting on Bitcoin, then you're betting that supply can't be changed, and the desire for money that can't be spent, that you can own and you can spend, is going to be worth more and will be more useful to more people in the future. And so really my final message is that even if you buy your home, if you put your money at a bank, everyone's speculating, and you either have someone speculate for you and make those decisions for you, or you get more educated and you decide what makes sense to you as the biggest change in financial history unfolds over the decades ahead.
There's another question that I can just not ask. Thoughts on gold?
Gold is a store of value. I think it will continue to be a store of value. It's a great way of preserving your cash if you don't want to increase the value of your money. And it has an important role in the global currency wars. Personally, I'm more interested in speculative store of value than store of value, but I do believe that as your speculative store of value becomes worth more, you might want to decide to preserve your wealth rather than speculate. And so I do think it still holds an important role in the future, but I think it's going to be losing more and more market cap to things like Bitcoin.
Interesting. And as Simon said, we are in a revolution right now. This is the biggest thing that has happened to mankind, because we are disrupting the biggest and oldest and most important industry, namely the financial industry. You guys have to get involved. The best way to get involved is to actually build something, not just trade, because as Simon also said in the stream, that most traders lose money. Therefore, I encourage you to join our academy. Go here to all tracks. If you are completely new to Bitcoin, take Blockchain 101. If you are a bit more savvy, take, for example, Bitcoin programming or new blockchain developer. Bitcoin programming will teach you how to program on Bitcoin, on Lightning Network. We will be adding liquid sidechain very, very soon. And just tell me what you have learned in the comment section from this video, and we will be giving away to one person tomorrow. And yesterday, the winner from yesterday is Josium305 that said, greetings from El Salvador. I learned that Ivan is Illuminati. Oh yeah, it was a joke. We had a joke yesterday. But anyway, Josium, you won the academy because you commented yesterday. Email me contact@IvanOnTech.com. We will be adding you to the academy. Simon, thank you so much. Guys in the chat, thank you so much. Always amazing. Simon, I will be adding all the links in the description so you can all find him, and have a good day, Simon, and goodbye everyone.
Bye-bye.